Good evening. This is the video newsletter for buysellshort.com for Tuesday, August 11th. We had a down day in the market today. The clowns on TV were saying the reason for the downgrade or the down move in the market today was some clown from a fifth tier brokerage, Dick Bove, supposedly some expert on financials, and came out with just unbelievable research. His research report today said that banks should pull back, that they probably won't make money in the third and fourth quarters. Oh my God, what a genius this guy is. What would we do without him? As such, the financials sold off. It was just an excuse. But, these days that's all it takes. And most of the point loss in the Dow was a result of, the large cap financials just selling off. But, it's ridiculous whenever you see business headlines blaming some douchebag for being the reason that the markets pulled back when a pullback was inevitable. Here we're looking at the 15-minute chart. As you can see, we've pulled back into that rectangle formation that we broke out of last week. Market was able to hold up above the 9,200 level, but it goes without saying the market's overbought. We're up 1,400 points over the last 3 or 4 weeks, and a retrace is not something to be surprised about. Here, the red marks you see here is a Fibonacci retracement, and right now we'd be looking for a 38% pullback that would take us to the 9K level. If we flip over to the daily chart, you can see as well on the daily, we're looking at the 20-day exponential being 9071 right now. We've gone a month without a retest. That, as you can see, throughout the rally from the March lows, about as long as we go without a test of the 20-day exponential is about a month. We're overdue for that test. So again, no surprise that we're seeing a sell-off. We've got the Fed meeting ongoing right now today and tomorrow they announce their findings. Nothing new is going to come out of it. They're not going to raise interest rates. What they're probably going to do is say that the economy looks to have bottomed, and give us the same old spiel about prospects looking good going forward, but they're going to continue to support the market. We'll see how the market reacts to that. I sent out that alert today talking about how raising cash levels right now, fewer plays, higher cash levels, 70% plus cash is our desired cash stance right now, and that perhaps we should look at some put options on the major ETFs. Then you'll notice it was a little bit of wishy-washy in that email, because when you look at the price of the puts right now, they are extremely expensive. And the reason for that is everyone and their mom is expecting a sell-off. And you'll remember what I've said many, many times in the past. When everyone thinks something's going to happen in the market, 9 out of 10 times the market does the opposite thing. Now, things are very overbought. We usually have a sell-off in September, but we've got a lot of people short and buying puts. And, even with options expiration next week and a counter trend move, if we do see a down move, a breakthrough 9,200 on the Dow, I don't think we're going to go very much lower. So let's see what happens. It just seems like, another bear slash short trap in the making here, especially with so many people out there saying the end is here. We'll come back to this, but let's jump into some stock plays here. EMMS, we called this one a week or so ago at the 27, 28 cent area. Hit 75 cents today. Almost a 300% move on this radio stock. Yet another radio stock just up massive. Our laggard radio stock, SBSA, still has not had the same size of move that all the other radio plays have. We should see this one break out tomorrow. Again, we'd be looking to add this one under 30 cents for scalps. Target still remains 40 to 50 cents on this one. And if it follows what these other radio stocks have done, this one should be trading up in the 60s. Earnings are coming over the next week or so. They haven't announced an earnings date yet, but it's expected between the 14th and the 24th. So that's probably the only thing stopping us from loading the boat on this play, given the momentum in its sector. LTRX, as we've mentioned before, laggard tech play, cash flow positive, but it's peer, ELON. Let's pull that one up. ELON, direct competitor of LTRX. Stock is up 50% over the last couple of days. It's now got a market cap 20 times that of LTRX. but LTRX actually makes money, is cash flow positive, and does 52 million a year in revenue. Elon does 100 million. So little bit of divergence here between these two stock plays, which gives us even more of a good feel on LTRX in the near term. Target again here is a move to 55 cents. Would be looking to add dips under 40 cents on this one. NVD, this is our biotech play. See here, we've got a nice symmetrical triangle. Breakout is 28 cents. Let's say the 50-day moving average at 29 cents. This has pretty much stopped the run in the past. A break over this, and we'll see our move to 40 cents here. Amex stocks have been seeing some nice volume over the last couple of days and some nice pops, so it won't be too long before traders find this play. ASTM, another monster winner for us yesterday. We were looking for a breakout on Friday. On this one, we were sent out an alert to buy this one 40 to 45 cents. Hit 60 cents plus pre-market yesterday. Can't argue with a 50% gain in the day. Again, when it gets back down here to the 42-cent area, we'll look to rebuy for the next inevitable move higher. FNM trading alert after hours on Friday at 82 cents. Stock hit $1.30 plus today. In the chat room yesterday, right before the close, we actually picked up a gapper play on that one at 96 to $1, and target was $1.20, which had hit plus some today. Very nice plays for those of you guys not in the chat room. It definitely plays to stop in and say hi. STSI was a trading alert yesterday at $1 on its earnings report. The play here was in the earnings report, they mentioned that they were in talks with another tobacco company about using their product. And then they also mentioned that their appeal with RJ Reynolds Tobacco, the decision is due by August 24th. So this should put this stock in play over the next couple of weeks. Again, this is a heavily shorted stock. 20% of the float is short in this stock, and these shorts are not giving up without a fight. When we get a close above the 20-day exponential, that is at $1.08, we should see a very powerful move higher. So stops on this one, 93 cents. It's been rock solid for the last month or so, and I think this one is getting coiled for a really big move in the near term. So it pays, or probably pays, to have at least a small position in this one right now. So that's it for the video tonight. Again, Dow looks like it's starting to roll over, but we've got a lot of interesting variables at play here. Large interest in puts. We do have RSI breaking down. We're about to get a negative MACD cross. We've got stochastics breaking down through 80. These are all classic pullback signals in the market. So if you're looking to pick up something and don't worry, or are not worried about paying a high price for it, would be considering the October, maybe 88, 89 puts on the DIA. But again, they are overpriced in my opinion right now, and I'm starting to revise my thinking about a tank in September, October. I think we're going to see a pullback, but I don't think it's going to be to the extent that everyone thinks. I mean, look what stocks like AIG and Fannie and Freddie Mac have done. Hedge funds are under the gun right now. They're way below the average return that the market has given so far this year because they've been short and or sitting on cash on the sidelines. They have to play catch up. Any dip that we see will probably be fast, but won't be that great. If we see a break of 9K, we're probably going to see a test of the 50-day moving average, and then the buyers will rush back in. But for now, we're going to sit on high cash and play the momentum that makes itself known. That's it for the video. See you guys in the chat room tomorrow. Good night.